Hey, everybody, welcome to Top Tier Outlook. Hope everyone's having a great weekend. We're going to take a look at what is to come for this week. And there's a couple really interesting things. So let's start off with what this week we can prepare for specifically. How can we get tactical as we're really getting into the first week of December? And we'll take a look at the S&P and the NASDAQ and the Dow and the Russell and those heavily weighted sectors. But before we even get to the chart, there are a few things that we can do before we start taking a look at what the setups can be this week. We can start thinking about how the year is going to end. We can start thinking about how we're going to prepare for earnings. And I will typically do that on the daily time frame. So how do we prepare for how the year is going to end? Not that I'm trying to predict anything, but if there's generally a sentiment of strength getting stronger and weakness getting weaker, the first thing that we can take a look at is the NASDAQ. This is the strongest of the indices. It's hit a new high for the year, and it's going to pull the S&P up with it because of that tech weighting that the S&P shares with the NASDAQ. Here we are in the S&P futures above 4,600, and we're kicking off early Sunday with a little bit more follow through, or at least hanging on to 1,600. Now, it doesn't mean that I don't like the Dow, and it doesn't mean that I don't like the Russell, but we have to think about which indices are going to be led by their strongest sectors. And that's where things like XLK, XLC, and XLF will disproportionately benefit the S&P and the NASDAQ. NASDAQ first, S&P second, tech and communications, and financials. Those are things that I'm going to definitely look at to follow through to the upside. Now, why not the Dow? Why am I not giving the Dow any love? The reason we want to stay away from the Dow, or at least shorten the time frame or focus on the stronger sectors within the Dow, is because while XLF financials might be the number one weighted sector in the Dow, it's also going to have to make up for some of the shortcomings within the Dow. Healthcare is not looking strong. It's not above where it started the year. It's barely above the 200 propulsion. And energy. So before we start saying, okay, Dow is going to continue higher, let's remember that while XLF is doing great, let's take that idea over to the S&P. And remember, the Dow has to do a lot more work when it comes to some of the components, in this case, the sectors. Lift the hood up, take a look at the Dow, and you'll see we've kind of got some cylinders not firing in healthcare and in energy. All right, so that's the general take of what I'm looking for as the year ends, and where strength will get stronger and where weakness potentially can get weaker. TLT, healthcare, regional banks, these are still below where they started the year, and certainly susceptible to tax loss harvesting. Now, what about earnings? I'm writing the Top Tier Outlook right now. So for those of you that are Sector Secrets Mastery subscribers, Top Tier Outlook will get posted tomorrow. And really the main focus is, of course, the indices. But we're going to get into the fact that earning prep starts now. I don't love earnings season. I'm going to put it out there. I don't love it. You go back a few decades and it was just an envelope you got in the mail. There was no spectacle. There was no brouhaha around the volatility of earnings. I liked it better that way. That said, we trade the markets we have, not the markets we want. And that means that what can I do when I start taking a look at the, financials, right? When earnings season really officially kicks off, we get a number of financials. Well, financials are part of the strength that we're seeing as we wrap up the year. And if we can start our earnings prep by asking ourselves a few key questions. Are the stocks that are going to be about 4 to 6 weeks out from earnings above their 200 exponential? Are they in trends? Can we start to position ourselves on dips without having to deal with the implied volatility being high, which, by the way, favors traders who want to write premium in front of earnings? But for traders like myself, directional debit players, long calls, long puts, we need a little bit more setup. We need a little bit more time so we don't stumble into that increased implied volatility that just makes those calls and puts too pricey, too vulnerable to vol crush. And then how do we avoid vol crush? Vol crush absolutely benefits traders who write premium. But again, being long calls, long puts, what I'll focus on is let's see if we can't take advantage of that rally, that run into earnings, and be out before the shenanigans. That's the way I like to do it. That's how I sleep at night. And we'll take advantage of the trends that are just going to have a little bit more attention. JP Morgan is something I want to buy the dip in anyways, right? Earnings doesn't supersede structure. Earnings doesn't supersede the directional bias. It's just another element that could give us some more movement in that direction, a little bit more follow through, a little bit more attention, a little bit more volume. All right, so that's what we've got coming up. December should be a really interesting month. Swings, hopefully we get more of these as we have a lot of data, a lot of jobs data coming up this week. Everything from JOLTS to non-farm. We had a lot of FOMC speak, for better or for worse, last week. But more than anything, the inflation data, Jerome Powell, remember, we had the PCE and then Powell. And as we take a look at those Fed fund futures, something we will continue to do throughout this month, this is the most dovish the Fed fund futures have looked. And remember, it's not a matter of whether they're wrong or not. Remember, there's two functions for the Fed fund futures. And if you want to understand macro, if you want to master macro, what I have found is that all the different pieces and data and Fed speakers are distilled into one place. And that is the expectations we have for shifts, whether that be actual cuts and hikes or messaging around monetary policy. Are they going to hike or are they going to cut? They're going to cut. Hikes are done. Now, how soon will they cut? And there is the conversation is happening in the Fed fund futures, but the conversation is saying, hey, May is a possibility. March is well, actually, I will take that back. May is a probability. March is a possibility. And that means higher for longer is not really playing out. And remember, gang, it's not one or two volatile days in the bond market, or it's not one or two volatile days in the euro, which is a great way to understand what the dollar is doing. The dollar is in a downtrend. How do I say that so confidently? Because the euro is in an uptrend. The euro is above the 200. What about the long bond? Gang, long bond is starting to show bullish momentum. It's got a long way to go, and it probably has some tax loss harvesting that's going to impact it. But that's okay. That's a December thing. As we go into next year, I'm going to be looking for lower yields, which means higher ZB futures, higher TLT. All right, so there we have a quick look at really how I'm going to tackle December. I'm not predicting anything. These are probabilities based on the data and the price, and then we need a setup. And I got a great question on my Twitter feed over the weekend. I was on Benzinga last week, and one of the things that I said is I'm going to look for resistance at the 200 on the Russell. Now you'll notice, Rog, you don't have a 200 period exponential moving average here, do you? Where is it? It's the white dots. The white dots represent the 8 exponential moving average and the 200 exponential moving average crossing. When they cross and interact with price in a particular way, so I'm looking for the cross, then the dots show up. And when the dots are there, there's more likelihood, there's more probability that price will respond to it. But you'll notice the dots stopped as of mid-November. Not that the 200 exponential, if I were to have put that indicator there as a standalone, wouldn't still be plotting away, but you'll notice how much less respect for the 200 there is if the propulsion indicator, which is really my way of having a self-correcting, smart EMA, exponential moving average, notice it's not there. All right, so you might say, okay, Rog, well, if you want to trade the 200, what do you need? Not only does price have to get there, but then price has to respond to a level that I'm going to say is a setup. That level could be a price pattern, like a minor high. That level could be stopping and stalling within the daily price movement range. That level could be a major psychological level or a Darvis. If there is not a respect for any of those things, if prices don't get there and stop, the setup isn't valid. So I can have a plan hey, I think that we could stop at the 200. But that's not the setup. The setup is, hey, is the 200 in the daily price movement range, or is it the 200, the daily price movement range, and a minor high? Is there respect for that level? Because if there's not, got to let it sort itself out before we engage. And I think there's a lot of times this assumption that, hey, if there's a level that we're watching, clearly we have to act when price gets there. And that's not the case. I want to make sure that the level that I'm watching is also something that broadly the market participants are watching and, more importantly, reacting to as well. All right, so that's where we are on that Russell. Now, you might say, Rog, what about the KRE? KRE is another thing that, once again, now you might say, Ron, but the 200 propulsion was there. I'm actually purposely trying to find a few setups where, we have levels that have been working spectacularly well over the past few weeks, if not months. And I want to show, because this is truth in trading, gang. Nothing works all the time. The reason that the traders in my mastery tend to do as well as they do is because they're thinking for themselves. They're learning how to do that. They're learning how to follow the discipline of a sequence that's been tested over time. So here's another great example. Have we had resistance at the daily price movement range, the gold zone? Absolutely. But unless price stops there and shows either a minor high, a minor low, some sort of stall, something to signify that that level could hold, there's nothing I can do. Now I know my mastery folks are saying, but Rog, you're missing the most important point. Yes, this is where my mastery folks are way ahead of me. But for those of you watching right now, yeah, Rog, why wouldn't you get into a short position in KRE? Really, really simple. Take a look at the quality of the trend. It's green. And even though it was below the 200, as of the 29th of November, I'm not even allowed to short this thing. It doesn't mean there may not be tax loss harvesting. It's still below where it started the year. But once this thing goes green, I'm not allowed to short it. So we've got some interesting things happening as we're going into December. Of course, an uptrend can go back to chop, and that would change the way I treat the price action here. But the thing that I think is so interesting about KRE right now, and one of the reasons that sectors and indices have to be discussed in the same breath, is if KRE is in an uptrend, Russell is going to have a lot more strength than if KRE was in a downtrend or still neutral. All right. So there you go. I threw a little curveball at everybody saying, okay, wait a minute, Rog. It's not just find the level and just short. Nope. Got to wait for the setup. So I got a lot of questions about that early on. And I thought, you know what, let's tackle it here in Top Tier Outlook. But bigger picture, again, earnings, bigger picture, end of December. And then also we have to take a look at where we are in terms of the year. By the way, gang, the Russells managed to get above that level, right, where we started the year. And then here is the KRE, right? Where do we start the year? Take a look. See that level up there? Way up there. So you'll see, gosh, this is not going to be an easy slam dunk kind of environment for tax loss harvesting, which, by the way, is not even close to being my favorite when it comes to what I can do in December. What I can do in December, my two favorite things to do: prepare for earnings season. That's number one. And number two, let's play with the side of December, which is the strength gets stronger. I actually don't like to short an environment where we're starting to see leadership in the indices. Yes, there are going to be names that are going to be subjected to the tax loss harvesting, but I think there's a lot more to like when it comes to the long side. And if you haven't already, on Friday, I did a video about how I want to buy and the setups that I'm looking for. So if you haven't already checked it out, it's over at the Simpler Trading YouTube channel, and you can check out Friday's video. And I walk through how I use a specific layout, and you can create this layout on your own. How I use a specific layout to look at the individual stocks that are weighted within the sectors and the indices, and how that helps me determine what I'm going to trade and in which direction I'm going to trade it. So check out that video. It's back at the Simpler Trading YouTube channel. I'm trying to remember what the heck I called it, but it was Friday's video. Actually, I can tell you exactly what I called it. I called it pretty straightforward. December game plan is to buy. There you go. All right, let's tackle a few questions here as we are getting a jump start on the week. And again, thanks as always for being here and loving trading enough to get ready for the week on a Sunday. All right. So what is the propulsion indicator called in Think or Swim? So K, it's not built into Think or Swim. It's a free indicator. I don't know if we still make it available for free download on countdowntrader.com. Do check that out first, okay? Head on over to countdowntrader.com. I still believe we have a number of my free indicators, Wave Grab, Propulsion, the Darvis 2.0 over there. I know it's built into TradingView where you can search it, but it's not built into TOS. TOS doesn't unfortunately work that way. But if you're inside the members area, you can, within Simpler, you can access that. It's difficult to share free ThinkScript through Thinkorswim. That's why we use Countdown Trader, and I believe it's over there. All right. So then if we're going to be using things like, propulsion, by the way, the 200 is my favorite propulsion, but it's not the only propulsion that I'll use. The other one that I'll use is the 8 crossing the 21. That's a pretty good one, but I'll start thinking about that if we start getting accelerated uptrend. So for now, just for the clarity on the screen, the clarity on the chart, I would not put any other moving averages other than the 34 EMA wave and the 200 propulsion. So for now, I would keep those on the screen, and let's wait until the uptrends start becoming more widespread across indices and sectors, and maybe even get accelerated, and then the 21 might be helpful. Yeah, for sure. All right, gang. So gosh, that 20 minutes flies on by. Let me make sure that everyone is here. Let me do this. Do I have, oh, I closed my Firefox. Oh, craziness. I did. So usually I have my Firefox browser up. And one of the things that I'll do is I'll look at Forex Factory. Oh, let me give you the calendars that I'm going to be using, especially the last couple weeks. Forex Factory is my go-to. We're going to start looking at Estimize. So if you join me every day for Charts and Coffee, you're going to see me start to use Estimize. It's a free calendar, but there are a lot of cool things that you can do if you subscribe to Estimize, if you like to trade earnings. If not, don't worry about it. Use the free version. And one of the calendars that we're using a lot more of now is the calendar from Econoday. Econoday has been listing a lot of the Fed events that have not been. They've been neglected on Forex Factory and on Trading Economics. So we're having to add in Econoday, these names, Econoday for some of the FOMC speaking events. So those are the 3 financial calendars, and then we're going to start adding in Estimize. All right. So that is what we're looking at today. As always, gang, thanks so much for being here for Top Tier Outlook. The newsletter is going to go out tomorrow. If you haven't already checked it out, come join us. Check out what we're doing over at Sector Secrets Mastery over at sectorsecrets.com. Enjoy the rest of your weekend. I'll see you tomorrow for Charts and Coffee. Be good to each other.